Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, I had some urgent work at home, as a result of which I could not upload videos for the last 2 days. I'm extremely sorry. So let's get started. So yes, after making a low of $99.57 index, DXY is showing recovery. We can see that dollar is standing at 100 right now. So dollar is giving its best fight. DXY is struggling right now to maintain the temporary support here. DXY doesn't want to go down. After hitting the double digit, we can see that market is in recovery mode. But that doesn't mean that we have a trend reversal. As I always say, we need a fundamental factor. We need a news for a trend reversal. And right now we don't have any fundamental factor or news that will bring a trend reversal on the chart of DXY. So DXY is still very weak. If you see few more green candles also, keep in mind that the overall structure of DXY is still very bearish. As a result, you can expect that DXY will be facing resistance at each and every level. The next big resistance on the chart of DXY is around 100.80 to 101, and I don't think so today DXY will be able to cross this level in absence of any news. If you go to economic calendar, yes, we do have a news, but this news is not a big news that will bring a crazy volatility or a complete market structural change. Okay, as a result, I'm hoping that DXY will stay inside the range only, 100.80 on the upside and 99.57 or 99.50 on the downside. This is the range of DXY. So let's wait and watch and just observe how DXY performs. Now let's look at the chart of gold. So you can see that I have drawn many lines on the chart and you may be confused also. In a previous video, we talked about the resistance of 1984 and we saw a beautiful price rejection yesterday and market went down sharply. Right now gold is standing at 1975. So let's understand the chart of gold one by one. So first of all, if we look at the overall trend of gold here, then there should not be any doubt that market is an uptrend. The buyers are dominating this market, so there should not be any doubt regarding that. And in this type of market structure where the buyers are dominating, where the number of buyers are higher in comparison to the number of sellers, in this type of market obviously we should be looking for buy at retracement or buy at support, because this is the safest trading strategy in this type of market structure. So if you're wondering about the levels here, then yes, we have many support levels here. Okay, so let's discuss one by one. First of all, we have a support around 1940 to 1937. But the problem is that 1940, 1937 is far away from the current market price. In fact, we discussed about this level in our previous videos also. Then we have a level around 1945. Why 1945? 1945 because of previous bounce from this level here. 1940, 1937 was a very strong resistance previously. So we are expecting the previous resistance will be working as a strong support. But the problem is that these levels are far away from the current market price. As a result, we only need to focus on this particular portion of the market. In case a big drop comes, then you can concentrate or focus on these two levels here. But right now, your sole focus should be on these levels only. So during the day, if market shows a big drop, if you see that the market is going down with a big red candle, then we have a strong support around 1963 to 1960. Sorry about the drawing here. Okay, so let me write it down again. The first support will be around 1963 to 1960 in case of a big drop. If you see a big red candle on the chart, especially during the European session or US session, then keep your eyes on this level 1963, 1960. Why? Again, the same concept. The previous resistance will be working. The previous resistance will be working as support here. In addition to that, you can also see that we also have 50 moving average and 100 moving average around the area. So we have price action plus we have dynamic support around this area. as a result of which we can definitely consider that this will be a very strong support for us in case of a drop. And now you can see that I have also drawn Fibonacci here, so we have Fibonacci also around this area. So if we combine all the factors, 1960 to 1962-63 is a very strong support on the chart, and in this market condition we can definitely expect a big bounce from 1960 to 64. But yes, market is full of surprises, so follow proper risk management also. So if market comes to this area, observe the market. You can also go to 15 minutes time frame and just observe and see. If you see the market is taking support around this area, price is being rejected from below, you'll get the confirmation that yes, support is there, buyers are present, and you can definitely click on the buy button. In addition to that, we also have few minor support levels also. Few minor support levels around 1969 is a first minor support level, which is also a weak level, and then we have second level around 1965. During the day, if the volatility of the market is low, observe the market 1969-65 level. You can expect a minor bounce of 25 to 30 pips. If you're day trader, if you're scalper, then you can consider taking a buy position around 1969 to 1965 level if market takes support. You want to know why? Let me show you. See, we are drawing Fibo from this particular point here. Okay, we are not drawing Fibo from the lowest point of the chart. We are drawing Fibo from the middle portion of the chart here. But while drawing Fibo from the middle portion of the chart here, okay, we can see that we have 1969.6, okay, as the Fibo 38.2. You must be wondering why I am drawing Fibo from the middle of the chart, and why am I sure? Because see, while I'm considering this low of the market here, you can see market respected previous Fibo 23.6. It means that our Fibo is working. So as a result, we can expect that Fibo 38 will also work. So right now market is standing at Fibo 23.6%, but during the day or during the European session, if you see the market is going down, but the volume is not very high, market is going down with small candles, you can expect 1969.50 to act as support, and you can expect a bounce of 25 to 30 pips for day traders only. In case market breaks this level, okay, wait for the market to hit 1965 level. 1965 is a Fibo 50% retracement level. It should work as a temporary bounce. And only I have mentioned that we have a big support around 1960 to 1963. Okay, so we have many layers of support on the chart right now, but yes, volatility will decide which support will work and which support will not. If you are a beginner to the market, not have much capital, then wait for the market to hit 1960 to 1960 to 162 level, because that is the best support right now. But if you have experience, if you understand volatility, volume, then you can consider a scalping around 65 69 levels. Okay, otherwise stick to these levels only. After all, not all the levels in the market are same, so as a result, okay, you need to be very careful. And if you're wondering about resistance, then yes, we don't have any immediate resistance on the market right now. If we go to the 4 hours time frame, then you can see that the next immediate resistance will be around 2001 to 2005. This is the next immediate resistance. You must be wondering why. Then you can see the previous support will be working as resistance here. Apart from this, you can see that we do not have any immediate resistance after 1984. If market breaks 1984 level, observe the volume. If you see the market is going up with green candles, you can go for a buy as well. We cannot deny that the structure of the market is bullish right now. In fact, in our previous videos also, we discussed about this trend reversal when gold was around 1920, 1925. I told you guys that the market will be bullish, and yes, as per expectation, market is bullish right now. If gold breaks 1984 level, we can definitely look for a buy, because the next resistance is far away around 2001 to 2005. And if I draw Fibo here, then you can see that apart from previous support working as resistance, we also have Fibo 61.8% retracement level. So definitely 2001-2005 is a strong resistance. If not a complete trend reversal, at least we can expect a a minor retracement around this area, and we can also look for a sell. But right now that level is far away, so no use of talking about it. Okay, now let's focus on this particular portion only. Again, I'm repeating, we have three supports on the chart. Two are weak support, which will where the volatility will decide whether they will work or not, and one is good support, 2 3 level. Okay, and on the other hand, if market doesn't come for retracement and market decides to go up, then yes, there's a good chance that market will break 1984 and hit higher. In that case, if market is accompanied by volume, you can look for a buy. And in case market doesn't have volume, okay, and market reverses for 1984, you can look for a sell, but that is little bit risky because the market is in uptrend. That's all from my side, my dear friends. Hopefully you got my point. Anyways, this is my analysis. I can be wrong as well, so do not gamble with your hard-earned money. As always, be a trader, not gambler. If you do not understand the market condition, that you don't need to trade, because you, as a trader, you only trade when you understand the market. Okay, you don't need to trade, okay, each and every day. Okay, so bye bye, take care, see you tomorrow.